Welcome back, everyone, to another session here at Lend It Fintech. My name is Todd Anderson. I'm Chief Product Officer at Lend It Fintech. We have another great webinar ahead of us today, Building Resilient and Scalable Compliance Operations. Before we go ahead and turn it over to the panel for intros, just the first couple of announcements. One, we have our 2 virtual events coming up in the next few months. Just go to lendit.com, check out the European event, the USA event. You can get tickets, you can get information. So don't forget, just go to lendit.com for more details on both of those upcoming events. Second, thank you to Nitish, the team at WNS, for your support. Without support from partners like you, we can't do these webinars, we can't put on events. So we greatly appreciate your support. And lastly, we want your participation. So don't be shy, audience. Send in questions. If you hear something during the panel, just type it into your little Q&A box. We'll go ahead and move to Q&A towards the end of the session, but don't be shy. So just send in questions throughout, and we'll make sure we get to answer those as we get towards the latter half of our hour. And without further ado, I'm going to pass it around to each of our panelists for introductions, and then we'll go ahead and get the session started. Nitish, I'll go ahead and start with you.
Hi, everyone. Nitish Kulkarni, part of the banking financial services practice at WNS. And as you all would know, WNS is a digitally led banking financial services institution focused on providing solutions to clients across the globe. We are a part of the larger WNS team, which basically focuses on providing solutions to a majority of the business verticals across. Nico?
Thanks, Nitish. Hi, everyone. My name is Nico Barnard. I'm the Chief Operating Officer for Prodigy Finance. And Prodigy Finance is a student lending business that provides students the opportunity to go study overseas based on what their future earnings potential is. The business has been around for about 13 years. We've helped about 25,000 students from roughly 120 different countries. And our key focus, in other words, is in providing global lending. Over to you, Ed.
Yeah, hi folks. I'm Ed Ackerman, Director of Partnerships at Onfido. Onfido is an identity verification provider. We use AI to assess a user's government-issued identity document, make sure that's genuine or not, and compare it against their facial biometrics. Now, we solve for a range of use cases, but the most popular is in financial services and is around helping retail banks onboard customers robustly from the comfort of their own home. We're headquartered in the UK, but we're spread as a company across 10 markets, and we are totaling about 400 people globally now.
All right. Thanks, everyone, for your intros. To kick it off, I wanted to first go to you, Nico, and if you can just talk a little bit about the impact of COVID on not only Prodigy, but kind of how you guys operate and your business model. There's been a ton of impact, obviously, with COVID with all of us in a variety of ways, but I think that you have some unique perspective on being a digital business to begin with, but then how it's changed the way that you've operated. And tell us a little bit more about that.
Sure, thanks, Todd. Yeah, I think same as many other businesses out there, we've been severely impacted by COVID in many ways. I think when you look at our business, it is a fairly seasonal business in the sense that we go through the same sort of seasonal process year in and year out, and our processes, our engagement with our borrowers, our communication to those borrowers have over the years become pretty standard. And so one of the big kind of challenges that we faced early on in the process was to become a lot more flexible around that. Clearly, 2020 was incredibly disruptive. Many of the processes that we work with, such as schools starting at a certain point, admissions happening at a certain point, monies having to be paid at a certain point, all of that was disrupted. And so for us, it really became an exercise to have a look at our business model, to have a look at our tech, and to become a lot more flexible in terms of how we managed our borrowers or our students, through the value chain. So that was a huge impact. Obviously presented lots of opportunities because, you know, the reality I think is that being more flexible, going forward, having a product that allows us to kind of adapt to different opportunities was a huge benefit to us. And so in that sense, that was a definite win. I think the other big one, kind of bringing it back to compliance and especially KYC, a big part of our process is obviously, as you progress with us, at some point we get to the point where we need to get to know you better. We need to make sure that we follow all the regulations and the compliance sort of requirements. And we've always, you know, had it front and center to say this needs to be something that is a value add to our students. Whilst it is unfortunately a compulsory piece, we want to try and make it as easy and to the extent possible value adding as possible. What happened for us kind of during 2020 and with COVID-19 was that this actually became an ideal opportunity for us to engage with our borrowers. So something that in the past was very much around compliance and just needing to tick a few boxes became an ideal opportunity to communicate with our borrowers, to engage with them, to, you know, reconfirm certain things with them in a process that worked differently, in a process that otherwise wouldn't have allowed us to communicate with them, you know. And the great thing is that oftentimes, at least in our case, around your compliance processes is where you've got a lot of your capacity in place. You are fairly flexible, you've got extended capacity to communicate based on the needs that you might have. You've also got the kind of human in the loop component, which is a part that we obviously work closely with WNS on. And so in that sense, that step in our process in 2020 became a real big value add for us. And again, something that we intend taking into the future, because it really did allow us the opportunity to make compliance and getting to know our customers better a key part of the journey, and really allowed us to add value within that context.
Ed and Nitish, I mean, Ed, I'll start with you, but, you know, when all those changes, you know, kind of happen, you know, how important it is for, you know, a firm like you that works with, you know, a Prodigy or others, you know, kind of how important is flexibility? So you're able to kind of work with them as they're making these changes, because, you know, their business is not, you know, obviously static, and you know, so how do you kind of help them along the way? And Nitish, same question to you after Ed.
Yeah, and just to sort of echo some of what Nico said, I think flexibility was very much the operative word for us as for many others last year. So our service as an identity verification service, as a kind of key component of that KYC journey, is a 24/7 service. You know, that means that we need to scale for any eventuality. And what we saw was a sort of an overnight bifurcation of outcomes with our customers. Some customers who had the dream ticket of being in an industry that really boomed, and let's face it, all of us were using digital media far more. We ran a consumer sentiment survey which said 60% of people were using online services more during COVID. That meant volumes for those services really went through the roof, and that could have been anything from banking to gaming to practically anything. For those customers, we needed to be fully flexible ourselves and really ramp up with partners like WNS to meet that challenge and meet it quickly. And the other thing that sort of Nico touched on there was the creativity that allowed. So sometimes, you know, major events like the pandemic give you that opportunity to, yes, move very quickly and operationally, but also think differently to try and solve a much greater problem. So we really put a lot of bodies into our product to see how much we could increase the rate of automation of our service in a really rapid turnaround time. Because as those volumes boomed, that was a much better way for us to scale to try and meet that challenge through the technology. On the flip side of the coin, I think some of our customers were at least, you know, shocked by that outcome in a negative way. So you can think about travel and transportation, where volumes necessarily sort of fell off overnight, and thankfully in many cases are starting to recover. But in those cases, it's much more about being a good partner and sort of thinking more creatively. So those that had cash flow issues or unit economics problems, yeah, we have a duty to respond positively, I think, as providers to customers in those situations.
Thanks, Ed. I would add to what Nico and Ed mentioned. So I think for us, the key part was to basically build in a digital DNA. Whilst of course we focused on digital transformation services always. I think this pandemic basically was almost an overnight change for majority of us, all the businesses, and that basically meant you need to have a business continuity plan in place, which you can trigger almost overnight. And second, having a digital DNA as a part of your value chain, supply chain to provide services to clients is paramount, right? So the idea was to basically, transform business from being a relatively more value chain focused company with manual plus digital transformation services into building, almost 100% digitally compliant solution for our clients, which we can trigger at any point.
In terms of challenges a fintech faces, there's probably some on this call, but there's a variety of challenge obviously fintechs face when they're scaling, but as it relates to compliance, kind of how do those two things work together, Nico? Because there's clearly, especially fintechs, certainly feel a pressure from VCs. They have to grow. But at the same time, you don't want to grow at the expense of either putting your business at risk, potential partners at risk. So how do you do it in a way that's where there's compliance is a piece of it, but obviously doesn't sit there and hurt your growth either. So there's kind of a back and forth there. But as someone who's done this with Prodigy, kind of what are your thoughts on that?
Yeah, I think, for us being a lending business, a global lending business, obviously, having to adhere to the right compliance, regulatory and other frameworks is paramount. There's no negotiation around that. You've absolutely got to do it. And like you say, you've got to build that into how you think about your business and what that means for being able to scale. What we found over the past couple of years is that the technology and the solutions out there to help with some of these pieces is excellent and well advanced. So there's definitely no issue in terms of finding those solutions and being able to leverage them. The challenge though is that, again, for a business like ours where you have multiple jurisdictions in which you operate, the application of those solutions often become very, very specific. And so what did not work well for us in the past is to kind of look at this as a one size fits all and, try and scale across the board in one fell swoop. That just doesn't work. And so the kind of key lesson that we've learned is to say you have to be comfortable to kind of, do this in a bit of a step change manner. So you've got to be able to take certain parts. You have to work with, again, teams like, for instance, the WNS team to do things in a fairly manual fashion, but really kind of make sure that you understand all those requirements and possibly do that for a good couple of seasons so that you're comfortable, you really understand what it looks like in terms of your policies and your procedures and the nuances that might be specific. And then once you've got all of that better down, going back, working with your partners, making sure that you put the right technology and other solutions in place, become a lot more sustainable. So I think that's the kind of key learning for us, and continues to be our journey as we go forward, is really around making sure that you kind of test and learn in a fairly sort of manual way, but really use that to make sure your policies, your procedures and other things are properly nailed down, and then taking, the opportunity to see how you scale and automate that. So,
yeah, I mean, when you're talking about someone working in those various, whether it be countries, jurisdictions, and how do you handle that in a way that doesn't stop or hurt the business in terms of growth, but allows them to do it efficiently? Because there's certain things I'm sure all across the world that are different from where I am, from where you are, from where Nico is, and Nitish, and there's many different factors that come into play. And how do you handle a business that's going in those many different directions and helping them ensure that it doesn't overdo it and hurt growth and still keeps them on that path.
Yeah, and I think sort of piggybacking on what Nico said, I think the exciting thing is we have these fintechs who are looking to scale and take on the world, which is great. But it really multiplies. You can have your expertise, here in the UK and know exactly what the regulations say you need to do here. But as you look to address, one of the 195 countries globally, that just is an exponential growth, and that those problems just multiply. And in some cases you can't operate at all. In some cases your compliance operations need to flex dramatically. And so I feel like the sort of requirement for in-house expertise could absolutely snowball. And again, I think it's incumbent on providers like us, Onfido and others, to be an expert in the room for that piece that we are helping the customer with. We don't expect our customers to have an in-depth knowledge of the 4,500 plus government issued identity documents that we currently support, and nor should they. They should be focused on whatever is more pressing and higher order for them at that time. And so that's where we will look to shoulder some of that problem and make it a problem for ourselves to solve rather than our customers. And I guess the other thing Nico said, which is an interesting theme we're seeing when it comes to the technology in this space, is yes, there are lots of great third parties out there doing good stuff, and I can imagine, I don't know if it's the case, but I can imagine it's quite bewildering to say, who should I be working with? And I suppose one of the trends that we've seen in the technology space is an increasing consolidation of providers. So whether you think about acquisitions like Finergo's of Refinitive's transaction monitoring product, or even just partnerships like the one that we have with Salesforce, you're starting to see, hopefully, customers making easier decisions because they have a system of record and they can layer in their compliance operations within that system of record, rather than having data silos here, there, and everywhere to keep information on customers, one for their business needs, one for their compliance needs. Increasingly, we're seeing that come together. And I think one of our analysts that advises us on this, Gartner, thinks that there'll be further consolidation in the years to come. So hopefully that challenge will go away in time.
Yeah, and just to add to what Ed mentioned, and what Nico was driving towards as well, I think fintechs have gone into an overdrive mode, during the crisis. In my view, I think they've used digital solutions to combat COVID, and I think that's shown by the scalability and the cost economics in which they kind of position themselves well. I think what will probably come out in the post-normal of after this COVID is basically how fintechs kind of leverage strengths of every part of the supply chain. So, for example, in the compliance space, I think likes of Onfido and others, provide very point solutions to enhance the scalability of a fintech firm by, as Nico mentioned earlier as well, 190 countries, etc., allowing for that intersect, in fraction of minutes to basically, do a virtual check, and that's going to be enhanced through the AI and machine learning engines, which probably we'll speak later, and how some of the manual processes that basically are currently used to deal with these processes will basically be run through RegTech firms.
Before I move to the next question, just a reminder to the audience, if you have any questions, please send them in. We'll go ahead and get to Q&A towards the latter half of the session. Nico, in terms of kind of the balance of what we can handle in-house versus working with partners, kind of how does that thinking work in terms of, hey, I know I need a partner for this, and this, versus, hey, we can handle, there's banks or fintechs of variety of sizes that do it in different ways. How does that thinking work in terms of, not only selecting the partner, but deciding, hey, I need a partner for this, whether it be jurisdictional related or just, hey, we're good at this and we need to get a partner to help us be better at this?
Yeah, I think, the most important thing for us is when we think about compliance, when we think about the customer journey and then the partners that we work with, is we obviously want to keep that as integrated and as smooth as we possibly can. And one of the interesting things that we continue to evolve is, when you think about the compliance components of a customer journey, when is the ideal point to kind of, look at that, and how do you make that as easy and specific as possible for that jurisdiction? And so I think that's again where it's so important to take a bit of time, upfront, and make sure that you truly understand all the requirements in a specific jurisdiction, and understand those at a policy level, understand them at a sort of procedure level, so that when you then engage with your third-party partners, which are indispensable, because at the end of the day, if you truly want to scale and you want to keep an eye on things like your costs, etc., that's indispensable. But you've got to be able to have those conversations against the backdrop of truly understanding that jurisdiction with its unique sort of challenges, and having had some experience of trying to do it again, even if you have to do it in a sort of test and learn environment. So that, I think, is one of the key things that has helped us as we engage and as we decide on the partners that we need to support us. I think the one piece that probably goes with that and is really important, and again is probably very specific sometimes to the jurisdictions in which we work, is that you have to be very careful about how you automate things. Certain of our jurisdictions and our borrowers are very comfortable with following a completely automated process and having virtually no human interaction. For others, having some level of human engagement and having a little bit of that almost reassurance and human connection, especially like in our case, when you are talking about a big loan that you're undertaking and a certain commitment and some important decisions that you're making, does also make a difference. So you've got to kind of take all of those things into account and really understand your jurisdictions, your requirements, and then use that to kind of engage with your third-party partners.
And Ed, from the partner side, I guess similar question in the sense of, when you're thinking about working with someone and, they're talking about all these different jurisdictions and where they might go, does a similar question rise, like, can we, is this make sense for us on our side? Because, there's jurisdictions or areas that we might not know, but so how do you handle that portion of it when someone like a Nico and Prodigy or another fintech comes to you and says, hey, we're looking to do this, and that, and does it fit within how you guys can potentially serve them?
Yeah, we want to be the preeminent provider in our space globally. So we want to be able to say yes to every customer to cover every jurisdiction. But as we know, unfortunately, the world is a patchwork of different countries, different regulatory approaches, different risk-based approaches from customers. And so it's not always possible to say yes to every project or every initiative. And so what we find ourselves doing is very much collaborating with customers at the outset, being very clear with them up front about where we have strength, where we have expertise, where we have very, very strong product market fit. And if they're looking to do something that we would sort of say right now is perhaps a little bit more exotic to us or more roadmap, we'll be quite upfront about where that sits in our priority list and when we should be able to get that and support that. And we tend to find it's encouraging when we can start to piece together customer demands from across the piece. So like any technology organization, the more customer interest there is to meet certain regulatory requirements or to keep up with changes of regulation, the easier it is for us to make a case internally to focus on that. And one example of that right now is the ANSI requirements. ANSI is the regulator in France. Their requirements are coming to the fore, and we're working very, very closely with our product folks to make sure that we are in line with those requirements, that we've consulted with the regulator in this case, that we're clear on how we can solve those problems on behalf of our customers. And that then gives our customers confidence that they can grow with us into those jurisdictions that they are making that leap of faith into themselves.
I think a couple of thoughts from my side on this one. So what we've seen over the last few years is about 40% of the financial transactions happen outside of the banking space now, right? Probably about a decade back, that was less than 10%. And we expect that majority, maybe about 70 to 80% of the transactions will happen via fintechs going forward. What it basically means is that majority of the transactions going forward are likely to be outside of the remit of the banking space. And these will be managed by either the big techs or the fintechs in one way or the other, and that will be across jurisdictions. What it basically means from a compliance and a RegTech perspective is that given majority of these transactions are likely to happen outside of the borders, the assimilation of data via different data sources needs to be kind of quite robust, which I think has been the case over the last few years. And therefore, as the central banks and someone like the FATF apply more intergovernmental pressure to kind of combat financial crime, the amount of data that will be made available for for basically running these digital images and digital data solutions will enhance. And I think, therefore, in my view, some of these conversations are also probably leading towards what are the developments that are happening in terms of the AI and machine learning algorithms that will be developed going forward, and how that will potentially enhance financial crime, investigations, etc. Right. So I think we are probably sitting at the cusp of where the COVID situation, but in general, given the central bank intervention, there's going to be a massive work that will happen in the AI and machine learning space that will help to kind of combat some of these situations that we see currently.
We've mentioned jurisdictional, a few times. Nico, you mentioned all the various countries and areas that you're in, but more specifically related to that, when you're developing a product for a specific area, and how it doesn't just jump from, hey, it works in the US and it doesn't work here or there, and how to handle those challenges. But on top of that, how is the current crisis, has it changed the way you're thinking of not only developing product and an experience for those jurisdictions, but are you starting to see that even things that have happened there when you first went there have now started to change? So like, there's another dynamic to it, and how does, not necessarily focused on the crisis, because obviously we're all hoping that we're out of this quickly, but going forward, how much of it do you think has changed the way you're thinking, not only about a specific jurisdiction, but maybe how that will change the way you're looking at those expansions and just serving those customers going forward?
Yeah, I think, you touched on it, and I think some of the previous comments that Nitish made are also quite important there. It definitely is an ongoing process and a continuous process. Regulations continue to change, requirements continue to change due to all sorts of, external factors. And so it is never a static process. You've got to constantly go back, have a look again, and kind of evaluate certain things. I think clearly in terms of where we want to try and get to is to optimize the third party, partners that we can work with, and then these data sources, because ideally, once those things become more and more available, the onus on the individual is less and less to have to kind of, fill out forms or answer questions or do all of those sorts of things. And we can kind of do it to a large extent on their behalf. That definitely is the kind of place that you want to get to. And we are finding in many of our jurisdictions year on year, the kind of maturity and the growth towards that continues to get better. And so in essence, there's no silver bullet. You've got to kind of just continue to go back, have a look, understand what that again means for your policies and your procedures, and how you could, typically optimize those. What it means on a very human level in jurisdictions where, you unfortunately are still fairly heavy in terms of your dependence on the individual to provide information and to go through those processes. It does mean that your communication and your customer journey is really important. In our experience, we have found that as long as you can kind of contextualize and explain to people why this is important, and to a certain extent why this is even to their benefit, given the importance of a financial product and otherwise, it really is something that they are quite comfortable with. And so as you start out in certain jurisdictions where you might not have all of the third-party partners ready yet or all the data available. Then just make sure that you've got the communication and the customer journey and even a little bit of the education that goes with that in place. And then as that jurisdiction matures, you can obviously look to others and hope to leverage some of the scale that you've developed.
Yeah, and you raise a really good point there, Nico, about customer experience and educating the customer and inserting what might be considered friction in order to progress that. And I'd like to come back to that, but to the question that you sort of raised around the technology and how we might adapt our technology to meet local requirements. Piggybacking really on what Nitish said, that the future will be more and more AI and sort of machine learning driven technology. That's critical for us, right? We're an AI company. We're very focused on building our products with those technologies. We are presented with product market fit issues, which we've discussed already, but also the specifics of the product itself in terms of the performance of that product in different countries is really, really important. So one of the products that we have is a biometric service. It compares the person's face to their face on the government issued identity document. And that's a good way of saying, did that person who presented it, are they the same person as on the document, or is this potentially a fraudster? Like all AI services, that can be subject to what's called algorithmic bias, which is sort of systematic and repeatable errors in the computer system, which lead to unequal or unfair outcomes for certain groups or categories of users. For us, that could mean, the worst of case scenarios, that we're a better performing product for one race than another, and one skin color than another, and that's totally unacceptable. So we've on this specific topic, and we're really passionate about this, which is why I mention it, but on this specific topic, we've been working with the Information Commissioner's Office in the UK around algorithmic bias in artificial intelligence. And we're looking to adapt our models continuously, whether due to COVID or otherwise. The good thing is that we've been able to show and prove as part of that regulatory sandbox improvements in our own technology. So overall, a 10x improvement in the quality of the previous version to the next, to the current one, and specifically a 60x false acceptance rate improvement when it comes to faces of African descent. So we can't get complacent with this, but again, suppliers and partners in our industry, AI presents many possibilities, but also some potential hurdles, and we need to concentrate on making sure it's a level playing field and reducing algorithmic bias.
I'll probably share an example of how important it is to kind of get this right from a regulatory standpoint, and what's the role of a AI or a machine learning algorithm. Say, for example, if there was a transaction done with a money of say £20,000 that were transferred from jurisdictions like say Malta to UK, right? And when you inquire about this particular transaction, and this is the first time transaction from a new client, right? And you want to know why this transaction happened the way it happened. And you reach out to the person, you ask him for some more detail around this transaction. He says, he sold a watch or something like that. You want to kind of know that he's in some document to basically evidence that the watch belongs to him. There was a transaction done in the past which connects to this watch, etc. And this person is unable to kind of establish that piece of evidence. And then you ask for some more financial data about this particular individual to see if the source of funds and the amount of income that this person has matches with the cost of the watch, right? And if there is some correlation between that, it is fair to establish that this probably may or may not be a financial fraud, a financial crime. I think the reason I bring up examples like this is, we see majority of the financial transactions which potentially lean towards a financial crime activity being something similar to this. I mean, there could be 5,000 more examples I can state, but I think the role of machine learning and AI is extremely important, because any correlation of a situation like this needs to be kind of highlighted by the algorithm in a fraction of a second, depending upon when the transaction was done, so that any financial crime can be identified and stopped within, say, 2 to 3 minutes of the transaction happening, right? It is that important. And there's no way that any service provider can identify a financial fraud in such a short time. And therefore, I think, in my view, over the next 3 to 5 years, as the use cases for AI and ML kind of keep growing, and RegTech firms will basically be in a position to kind of compute this data and have the analytical capability to run so many algorithms at the same time. And that would highlight potential frauds, right? Now, we all know that the size of the financial crime over the last decade has probably been north of 200 billion or something like that. That's what I read. And the fines that come with some of these financial frauds is immense. Therefore, I think as fintechs grow and as regtechs grow along with the fintechs, it's going to be important. And obviously service providers like WNS, which support some of these firms, it is paramount that the amount of analytical capability that comes along with the growth of fintech and regtech is supported by some of these type of AI ML type activities, so that the scalability and the resilience of the operation is so sound that tomorrow, if the regulator comes back, it doesn't matter which jurisdiction it is, there has to be an auditable trail that is made available to the regulator, saying here's the track, right, and here's what happened. And perhaps I think some of these topics also lean towards blockchain, and how blockchain is going to emerge over the next 3, 5, 7, 10 years. On basically keeping that audit trail and making that available to the regulator at a very short time frame. And also, of course, from our own internal audit perspective as well, it is extremely important that these algorithms, as they develop, are made available to the risk committee and risk audit committee of the organizations.
To pick up on some of what Nitish was saying there, but from a different perspective, I mean, most of the time we talk about either fraud or something like that, it's in relation to catching the bad guys. When you're building a product, whether it be multi-jurisdictional, even if in one jurisdiction, how do you balance both, Nico and Ed? How do you balance the need to catch the bad guys, but also reward those customers that are good, and not create too much friction through the process, and ensure that, while you're doing the right things to, not become a victim of whether it be fraud or attack, but also that those that are doing the right things aren't necessarily going through 15 steps to get there, because ultimately you want those customers to come back and then come back again, or refer themselves, refer a friend to come because they've had a good experience. So how does that balance work to not only catch bad, but also reward good?
Yeah, it's views on that one. Definitely from a business from a business perspective, I think it again starts at a very foundational level for us, which is to work with our borrowers in such a way that they understand that whilst this is potentially a kind of friction point, it truly has benefits. It's got benefits across the board. Obviously, for the jurisdictions concerned, for other role players, but also for them as an individual. And so to kind of continue to drive that message so that people engage, hopefully in a fairly positive context as a starting point, I think is really important. Having said that, I think the part that Nitish also mentioned around data and analytics, in my opinion, is truly where the secret lies. Because as long as you start to build up a behavioral profile, which you can do with data and analytics at a much more individual level, you can start to treat individuals at an individual level. And so that means that you start to move away from rules and policies and procedures, which unfortunately are those things that, when you apply them to everyone, at times can feel cumbersome and, a proper friction point. And so I think over time, the secret is going to be in that sort of AI, machine learning sort of space, where you can start to treat everyone as an individual based on the individual behaviors. And that I think is the kind of medium to long-term solution that we are keen to work towards.
Yeah, I completely agree with that. sort of the personalization of compliance, I think, is definitely where we'll get to. And to your point, Todd, around the focus on fraudsters can lead to too many steps for good users. I think we as just a species, we're fascinated by fraudsters. You see movies about bad guys all the time, less so about good guys. And I think, interestingly, that doesn't really correlate with real life. When we look at the volume of people applying for a new bank account, it's probably less than 1 in 20 who are actually trying to do so fraudulently. And so, if you have too many steps, if you have too much friction, you're penalizing the 19 plus for the sake of that one. Interestingly, and conversely, though, if you don't have any sort of friction, if it's straight through, if it's too easy, if it's too much of a breeze, you also give those 19 plus users out of 20 pause for thought, and they start thinking, this is a bit too lightweight. What's going on here? Are these companies? Is this company legit? Are they actually going to look after my money? Is this a sensible place to do business? And so, we have this dilemma where we're always looking to automate and always looking to reduce the time it takes to complete a check, to Nitish's point. But at the same time, if you're not taking the customer through a journey and educating them as to what you're asking them for, why you're asking for that, and what they should expect as part of that process, you're leaving yourself open to potential of people thinking that you're not really a robust outfit, which is obviously problematic. I think personally on that point, customer journey design will be really, really important in the future. So, rooting out the baddies successfully, sure, we've got to improve accuracy and make sure we're not penalizing and wheedling out good guys as well as bad. But at the same time, we all as consumers, we gravitate towards great design. And I think user experience is going to be a massive competitive differentiator for any organization in the future. So it's kind of how do you make compliance by design a factor? And maybe it's because you're able to sort of automate or outsource those lower order activities like searching for false positives and day-to-day investigations, and instead think about the bigger picture about how you can intermesh and interweave compliance in a beautiful customer experience.
I think a lot of the answer, Todd, that you were speaking about probably lies in, how systemic fraud versus a systemic good behavior is going to be differentiated in the future, right? I think what I mean by that is, a majority of the transactions, say 5 or 7 years from down the line, are going to be almost like crypto, they're going to be cryptographically secure transactions. What I mean by that is, say if I do a transaction, I've got a certain income profile and I do a certain transactions from particular bank accounts that flows through 3 or 4 different channels. Majority of those type of transactions are likely to get mapped, without obviously kind of compromising on the data protection part of the individual, right? And over time, and I leaned on this topic on blockchain, over time, that information is going to be made available to central banks, banks, of course, but central banks, fintechs, etc., in a secure manner. And it's going to be very easy to be differentiate between what a systemic fraud is and versus what a good behavior is, right? Obviously, this is much far away. This is probably 5 to 7 years from where we stand right now. But I think eventually we will get to that point where, given some of the developments that we spoke about in the AI world, I think we will get to a point where we will know what systemic fraud looks like and what good behavior looks like. And I think a lot of the fintechs and banks are going to lean on this information to, plan customer journeys and obviously kind of align majority of their customer campaigns around such data.
In terms of, we'll move to audience questions here in a couple of minutes. So if anyone has questions, please send them in. We've got a couple of questions, but if you have more, please don't be shy. We'll go ahead and answer those questions in a few short minutes. Related to regulators, I know it's been mentioned a few times, but in terms of working with regulators and new technologies, how, I guess, open-minded or how up to date How in tune are they with, it feels like there's technology changing by the week at this stage. And how is it in terms of, working with the regulator, that either you're using a technology that they don't know, or perhaps using a technology in a way that they didn't envision? How does that work and complicate what you're trying to build? And anyone can answer this. Nico, maybe you first as a operating fintech, but how does that impact kind of how you're building your business? Because especially as someone who works with regulators all around the world.
Yeah, I think happy to take a first stab at that, and then again would like to hear what Ed says, because he's probably more on the receiving end of that in a certain sense. For us as a business, we have to kind of assume responsibility in the first instance, for our own due diligence, and we've got to make sure that we are comfortable that we are meeting all the requirements that we need to meet in any jurisdiction. My experience, in working with the regulators has never been that they are prescriptive in what you can and cannot use. They are very much interested in the end result and making sure that you adhere to their requirements. And so there's quite a bit of leeway for us as a business to say, well, obviously then the onus is on us, the responsibility is on us. Let's make sure that we understand the processes, the requirements, and then understand how best we can support that with third parties to help us. But definitely have not come across a situation where regulators themselves are too involved or too prescriptive in the type of solutions that you can use.
Yeah, I'd sort of echo that. And, we interestingly, we're not regulated ourselves for our technology, but our customers are. And so, people like Prodigy will be under scrutiny, but that means that scrutiny is placed on us from our customers to make sure that they can meet with an audit requirement and be comfortable with the solution that we're able to provide. So it's effectively as if we were in some way under the microscope. And if you think about a regulator, they're often, they're not flush with resources and team. And so it makes sense that they are not overly prescriptive, or that they try to encourage adoption of new technologies, but in a way that's safe and in a way that's sort of protective, without going to the other way of sort of having a sort of Wild West scenario where new technologies are freely adopted and that harms customer outcomes. And you can think about things like, data being sort of lost or shared. These are things that the regulators should really scrutinize. I think, in the UK in particular, which is where we're headquartered, we're blessed with a very progressive regulator, and there are others around the world. I'm not sure what they're like in South Africa, but you often hear about Singapore and others. We were lucky enough in the UK to participate in the Financial Conduct Authority's regulatory sandbox a couple of years ago. And that gave us the opportunity, along with a host of our partners, to sort of prove the model, let's say, around, in that case, portable identity, which is an emerging technology in our space, and to do so safely without affecting customer outcomes negatively before we go to general release and general adoption. I think there are certainly discrepancies. There are certainly regulators who do take a more prescriptive approach, and that can be harder for us at times. But I think overall, where they're encouraging, where they're looking to set up sandboxes, where they're keen to understand the possibilities of technology, and irrespective of what that might mean for future regulation, those are exactly the sorts of frameworks that help fintechs thrive. And that's no surprise, therefore, where you see a high concentration of fintechs starting up, because that's where, that and alongside other must-haves like funding, those are the fundamentals that really help us grow.
Yeah, I think I agree with everything that Nico and Ed mentioned. I mean, regulation is such a big topic. I really don't know where to start, but I think let's go with this. If I just were to pick up the last 5 or 7 years, and look at, probably every year there's been a new regulation, right? At least in this part of the world, in the European geography and the UK geography. I mean, you've got PSD2, open banking, MiFID II, and a few other regulations depending upon which industry you operate in. And open banking is one such regulation that I just want to kind of spend a couple of minutes on. In a nutshell, open banking basically allows for majority of the fintechs to basically lean on the information that is currently resting with the 8 or 9 large banks in this geography to provide customer service. And that's a very, very progressive regulation by the UK regulator here, and that allows for competition, that allows for expansion of the if you will, the business outlook, right? And but at the same time, it also kind of brings in a lot of responsibility as well with the fintechs and regtechs. It also means that because as I touched upon this point earlier, that 40% of the transactions that happen in the Western world, in the developed countries, are now outside of the banking domain. So that basically means that they happen through big techs and fintechs, right? And that's going to be probably leaning between the 70 and 80% mark anywhere in 5 years' time from now. And because there's going to be so much of data available, and therefore it needs that much processing scalability. At the same time, it needs to be done at a very, very short time frames. The regulators are obviously kind of come back quite strongly if there were misses in the value chain, right? So it is important that whilst, of course, this fintech and regtech businesses grow, it's also important that they look at some of these the responsibilities that come from the regulators very closely, because understanding the nuances of some of these regulations is going to be critical for the successes of fintechs.
We had a question come in here from the audience. The FCA have done some tech sprints where they introduced the idea of machine readable regulation. Do you think this is many years away, or are you thinking about that today? And will this be a new way that compliance needs to work?
Ed, do you want to take that?
Yeah, I can kick that off. I'm not sort of immediately familiar with that sandbox, but I am familiar, obviously, because we've participated with the Financial Conduct Authority sandboxes in the past with the way they operate, and I think it's encouraging the way they go to market and the way they seek collaboration from players in the market, ourselves, customers, vendors, whoever they might be, whoever has a stake in that particular technology or that particular advance, they're keen to solicit feedback on that. It's possible that this particular machine readable technology will become a feature of the future. As I say, I'm not sort of completely across that particular technology, but I think the general sense is the regulator is looking to try and see where opportunities exist to improve processes and do so in a safe, measured way. And so we should encourage these types of sandboxes and obviously participate as much as possible as fintechs and regtechs ourselves.
Well, Nico, as a company, I mean, we've talked a lot about regulators' view on technology. How do companies like yours view technology in terms of there's a lot of innovation happening, whether, I know Nitish brought up blockchain, there's machine learning, there's, quantum computing in fintech or finance down the line. Like, how do you view, all right, there's a new technology out or coming out, or there's kind of momentum for it. How do you view that as, all right, we need to look at this, not look at this, like not necessarily what technology you choose, but more on the process of dealing with new technology?
Yeah, I think for us as a business, it's important, and we you can quickly lose sight of that. But it's important to always bring ourselves back to our customers. At the end of the day, our business exists to serve them and to provide them with with a service. And so within the compliance context, as we discussed a little bit earlier, when you are in the fintech space, you are heavily regulated for good reason. And that has to be kind of your point of departure, is to make sure that you understand those and adhere to them as we have discussed. And then the very next thing is to say, well, how do we make this, as efficient and as cost effective, and also hopefully as painless as possible for our borrowers. So within that context, any sort of technology that adheres to the sort of the requirements that we need to meet, but also allows us to make this as easy and as quick, and again, as cost effective also for us as a business as possible, are the ones that we will absolutely evaluate and look at. On a very practical level, again, for us as a business, it's been important to be careful how you introduce that to your business, though. The reality is any new technology needs a little bit of time to mature. You need to have an opportunity to kind of work with it. And so oftentimes what you've also got to make sure you've got in place is your sort of fallback options in terms of processes and procedures and business continuity that go with it. But in essence, any sort of a product that enables us to make that experience for our borrower an easier and a better experience will definitely be something that we look
at. We have just a few minutes left here, but another question came in related to, there's a lot of talk about jurisdictional issues, different customers, different profiles, different countries. For Prodigy, is there kind of an ideal type of customer that you're looking for? Is there a similar look across different jurisdictions? You're dealing mostly with students. So is that, are there trends across different jurisdictions that kind of fits the Prodigy model?
No, I think the short answer is no. We obviously do deal with various jurisdictions, and as I indicated earlier, we treat each of those, on its own merits with its own requirements, and where possible, we obviously try and get consistency and scalability. But no, there's definitely no one size fits all. We rather try and turn that around on ourselves and put the onus on ourselves as a business in whichever jurisdiction and whichever sort of student we're engaging with. It's on us to make sure that the process is clear, that the customer journey makes sense, that the user experience is as slick as we can possibly get it. And in that way, we try and treat everyone the same.
Yeah, I think if I were to just add to what Nico mentioned, so I think we've been working with with Prodigy Finance for the last 3.5 years now, and I think jurisdiction is certainly not a limitation at all. I think the focus has always been the academic performance and the admission to a premier school. I think every other aspect of that is managed. Whether it's bringing in a RegTech solution or whether it's bringing in a financial avenue. I think, and that's probably going to enhance the model even further. I think that's the best part of having a digitally enabled business model.
With the last couple minutes here, any final thoughts? I mean, what does the future look like? I mean, we've gone through massive change the last year or so. Is there anything near term that you think is changing dramatically? Just kind of any final thoughts on where we're headed here.
I think for me, the point that Nitish made around data and the analytical ability that goes with that at an individual level is where I think we'll continue to see significant impact and improvement across the board, because that will truly allow us to make this an individual experience, and with doing that, hopefully make it as easy and as slick as we possibly can.
I think two things that come to my mind. I think one is every business going forward will have a digitally enabled business, if not a digital DNA, number one. And number two is, I think there are several parts of the value chain which in the past was assumed to be manual in nature. In the past, it was assumed to be a time-consuming activity. But I think with the growth of RegTech and growth of other platforms that are readily available, point solutions that are readily available, I think fintechs are going to leverage that, and that will basically kind of keep them apart.
Yeah,
Ed, last thoughts.
Echoing what you've all said, and I know we're bang on time, but personalization is going to be key. And I think as AI improves and we can do away with manual processes for those lower order tasks, what are those higher order tasks that we want to be spending more of our time doing, that we want our compliance functions focused on? what about what if scenario analysis if we change our risk-based approach? What are sort of the building compliance in by design steps that we could take both to external policies but also internal policies at work? So I think I'm very optimistic about where things will go.
And with that, we will wrap up here. First, thank you to Nitish and WNS for your support. Thank you to Ed and Nico for joining us today. I thought it was a great discussion. Thank you again for the audience for joining us. We'll be back again soon here on another webinar. Just look out lendit.com for upcoming events, and enjoy the rest of your day, everyone. Thanks again for joining us.
Thank you.
Till next time.
Cheers, everyone.
Bye.